So he said, when you first ramp up a new technology, there's every possibility that you might not make money in the beginning, but over the life of the system, they'll be wonderfully profitable. So Jim believes that because Jim bought more Oracle.
I did. And, you know, my thought process here is it has been in a little multi-week downtrend since that incredible meteoric rise after the last earnings report. So as it's been coming down, look, I believe in the name, and I've been looking for the place at which to add it. And yesterday, Scott, as you referred to, the stock was down over 5%. But rallied back to be down only 2%. Now, I'm going to make a very inexact comparison, but if you go back to May, the Eddie Q comments about Alphabet and declining search, that turned out not to be the case, at least as far as Alphabet's then subsequent quarter report said. And all I'm thinking about this is not everybody knows. I'm certainly not impugning Eddie Q, but we don't know what this unsubstantiated rumor is, where it came from, if it's substantiated or not. And I think that
what rumor are you talking about?
Yesterday's rumor that the margins on rented
GPUs. It wasn't a rumor.
GPUs.
What do you mean a rumor? It was a report.
Who did it come from?
The information.
Who did it come from? Okay, it came from a news report that supposedly they saw an internal document. It was not a release by Oracle.
Well,
it was not a release by Oracle.
That's far different than a rumor.
It's not far different. It's not far different from a rumor. I mean, it is not far different from a rumor.
A news organization seeing an internal document is not that far different from a rumor?
Look, here is what. Show me the internal document. Show me a report from Oracle, not you in particular, but one in general. It is unsubstantiated. I mean, it's just an unsubstantiated report. It is not the same thing. And you know what? Look, I'm going to go back to what Eddie Q said. He said something, the stock, in this case Alphabet, moved wildly down. It turned out just not to be the case. Now, maybe Eddie Q will be turned out to be right later on. But all I'm saying is there is a lot of information coming out.
What Eddie Q said was a factual statement, too. The market made its own inference from that for what it might mean down the road. It's not like what he said wasn't true. He said for the first time ever, they saw it.
Okay.
He didn't make it up.
I'm not saying,
what are you talking about?
Well, I'll tell you exactly what I'm talking about, and I said I'm not impugning him, but what I'm saying is, to use your words, yes, there was an inference that Alphabet's search volume was declining. That turned out not to be the case, and we saw that in the second quarter earnings report. What I'm saying is, and the reason I added to Oracle, is there are going to be unsubstantiated reports like yesterday's. I like the way the stock clawed back, and I see this as an opportunity to add to it.
We're talking about basically a repayment on an investment taking a few years as if it's revolutionary. That's a primary principle of investing. Maybe not in stocks because we've got used to instant gratification. But when you make an investment in a piece of capital equipment, you always calculate what's your payback period. And it's true whether you're buying a linear generator that's looking to save you energy costs, or whether you're putting solar on top of your house. What's the payback period? So that should not be alarming to Oracle investors that there's a payback period, as just someone says.
Okay. Well, I mean, we'll see. We'll see. Jim buys the stock, again, on a little bit of that weakness.
It doesn't mean it's cheap, though. I think it's very expensive for very essentially flatline growth, for the next couple of years.
It's expensive on current earnings. If the earnings grow the way they...
on next year's earnings.
No, you're right, Steve. If you go 2 years out, it's 26 times. That's what you're basing it on. You either believe that or you don't.
Okay.